Hi, thanks for tuning in to our Practical Nerds weekly podcast. I'm Shub, and together with my partner and co host Patrick, we normally invest in founders in design, construction, renovation, and logistics technology. Many of our friends in the ecosystem wanted us to start a podcast on the built world, and in return, we decided to honor their request with a show about nothing at all. Hey Patrick, we are now in our 51st episode, and apart from it being, I would say, a reasonably significant number, what I guess it's also a reminder is that we've been doing this for a fair while. So, just to remind ourselves, we started doing this podcast in May 2023. So we've gone on for a fair while, like a year and a half. Now, if you're wondering why I decided to go all poetic on you and remind you of the history of Practical Nerds, in many of these episodes, because of when we started Practical Nerds, the narrative we went with is, hey, you need to be prepared for a very different kind of venture market where investors ask more questions, there isn't enough capital available. You need to dig in, explore ways to be self-sufficient. If the assumptions you're forming is based on excesses, greed, FOMO, etc., then that may not always be by your side in a changing environment where capital is not as readily available, etc. And I think for most of the time that we've been doing this, I think it is advice, or it is, I guess it is very well placed thoughts. It seems though that the market seems to be very decisively shifting in another direction, where and we have spoken before that, like most things in life and venture and business, there are cycles, and I think now we are now entering a different part of the cycle again.
It seems so. We have a few interesting data points in our backpack today. But first, I just want to make a principal observation about business, economy, trade, etc., because it informs a lot of how you should think about next year. And that is, economy and trade are nothing but sentiment. In the sense that how you value an asset group today, how you value it tomorrow, how I value it today, how I value it tomorrow, it's nothing but sentiment. And there are some assets that have that have clear utility. Food is such an example, or whatever, a fork that is not made out of silver, just whatever, a metal fork. And then there are a bunch of assets that actually have no utility in the same way that it contributes to us breathing, eating, sleeping, or whatever. But they deliver some form of excess utility. And all of that is attached to sentiment. All of it. And what that means is that because trade is built on sentiment, and we operate in a world where social media spreads and propagates sentiment all the time, and because we live in an age of where the financial markets have never been more transparent, more interconnected, we have high frequency trading, some might say hyper frequency trading. Sentiment also gets traded at a very high frequency.
Yes.
Now we are at a point where the US election was called in favor of one candidate, and that has removed uncertainty. That has created a new sentiment about the future. Whether that is substantiated to the left or to the right, to the up or to the down, is beside the point. There's sentiment now in the market. And so with this concept, just keep in mind, trade and economy is a function of sentiment, whether you like it or not, besides the super utility of very few items. We have 3 artifacts from this week to give examples of the sentiment that is brewing in the economy, and especially in tech, in venture, and as it influences architecture, engineering, construction, and supply chain tech. The first artifact, Shub, Databricks. So Databricks is rumored to be in discussions for a $1 billion financing. That is, Databricks is not IPO'd currently, at a $55 billion valuation.
Hmm.
That could be justified, that could not be justified. What we know from online, we're not privy to any insider information, is that Databricks is at or about 2.5 billion of ARR.
Mm-hmm.
That's the estimates.
Yeah.
55 billion valuation. That's what, like a
22.
22x?
Yes.
22x ARR multiple.
Mm-hmm. Mm-hmm.
Shu, what would you say to a 22x ARR multiple for a Databricks that supposedly is not profitable?
Hmm. I mean, look, I mean, if I'm not mistaken, Palantir right now is way more expensive than that. So there you go, I guess. So, but there could be reasons, of course, to justify a 22 times ARR, and obviously your estimates need to have probably baked in very high expectations of what future growth and future profitability is. And I think we've done a whole bunch of episodes before on what negotiations usually mean and what valuations the high valuations, while they indicate bullishness, they also indicate high expectations. Perhaps the firm is very high quality, which is why it probably will end up delivering on those high expectations. But it's also easier to value companies based on high expectations when you feel optimistic that those high expectations will be delivered. Now, again,
Mhm.
whether that's justified or not is a different thing, but that's where what you said about sentiment comes in. So
Hmm.
certainly bullishness has been baked in. It's not a, let's say, cheap or reasonable execution type valuation.
But are you seeing 22 times ARR a lot in the public markets these days?
No, it's reserved, I think, for a very small set of companies.
Yeah. So if it's true that Databricks is not profitable right now, which we don't know, that is speculated online, and in fact Databricks declined to comment on their profitability in an earlier announcement,
Mm-hmm.
which I guess is code for we won't brag about our massive profitability right now.
Mm-hmm.
So let's say it truly is unprofitable. My observation here is for you to price a business like this at 22 times ARR, um, in an unprofitable state, most likely you believe that the underlying IPO market will value your asset at
Mm-hmm.
a similar multiple or at a maybe slightly lower, but just slightly lower multiple, but the company will outgrow the multiple compression
Hmm.
in the near future. You wouldn't do it because it actually has not happened the last 3 years to pay such a multiple for a high cash burning company where the exit market, especially at that valuation, I mean, you can only do an IPO. There's no other way.
Mm-hmm.
Where the exit market through an IPO is closed. You aren't doing that. That's
Yeah.
what we saw the last 3 years, Shub. We saw
Mm-hmm.
multiple compression in these companies. We saw companies taking down rounds and accept money at valuations that previously they would have scoffed at, right? So what this signals to me is that here Thrive Capital, who is allegedly in discussions with Databricks,
Mm-hmm.
a great investor, feels quite good about the prospects of, again, allegedly an unprofitable company to
Hmm.
make a debut in the public markets
Yeah.
at a close enough ARR multiple to 22x.
Mm-hmm. Yeah, I mean, if I'm not mistaken, I think what I even gathered is Databricks' key competitor, Snowflake. I
Yep.
forget what valuation they are at right now, but that company has also taken quite the hit in the public markets post listing. So that's also something to keep in mind, and goes back obviously to where we opened this episode with on the cyclicality of sentiment. So Snowflake similarly had lots of high expectations baked in with a very high IPO price, which has since fallen by I think 60 or 70%.
I actually just looked it out. Snowflake 2 months ago was at a 14x ARR
Okay.
multiple, 1.4.
Hmm. Okay.
No, as you say, it might be that Databricks is the more high quality
Possibly.
P&L or
I must admit I have no idea and not in a position to compare the two firms.
completely possible. Maybe it's
Yeah.
growing faster. I think they were planning for 2024 to grow 60%
Okay.
year over year.
Hmm.
I think Snowflake is more like 10% in
I see.
2024.
I
So
see.
the growth is different,
Hmm.
if true.
Gotcha.
Interesting, just a side comment. I'm not suggesting any whatever exchange of information, but I mean the founder of Thrive, Shub, is who?
Oh, you've caught me by surprise here. I
That's
did.
Josh Kushner, the small
Oh.
brother of Jared Kushner.
Mm-hmm.
And I mean, Jared Kushner is the man of the husband of daughter Trump.
Yes. And now you've ensured that the few people who watch this episode, they'll get us cancelled.
No, I mean it's look. I mean, if you want to make informed decisions about how to price an asset, you shouldn't rely on hope.
Mm-hmm.
And Thrive is one of the most profitable and high performing funds at that scale,
Okay.
based on what other people that are informed in that matter tell me, which
Mm-hmm.
means that they must be highly competent at what they
Yeah.
are doing. So
Mm-hmm.
if you're competent, you're not hoping that this
Yes.
multiple is the right multiple. You're
Mm-hmm.
actually coming from an information base that this
Yeah.
is maybe also due because the tech IPO markets are coming live again. We have
Yes.
two more examples to this.
Mm-hmm.
Um, so Shub, we saw Waymo raise, what was it, 5.6 billion
Mm-hmm.
at a 45 billion valuation. Would that have
Yes.
happened last year?
I think for a company other than OpenAI or one of OpenAI's key competitors, I would say almost impossible.
Seems difficult,
Yeah.
no? So
Yeah.
a bit different this year. And then we saw Zepto in India raise 340 million in
And that is
September.
just one of, I think, three different rounds Zepto has raised this year.
Oh,
I
you're right. Yeah, there was another 660 million round just 3 months earlier.
Yeah, I think they've already raised over 1 billion, and there's rumors of another round still already in the making.
Yes.
So that firm is definitely enjoying a very strong patch. Again, I'm not in a position to comment on whether it's good or bad. I can tell you that it is very quickly ascending to become one of the very popular consumer applications in India,
Okay.
like a household name. People easily recognize that name.
1 billion raised in 2024 in India.
Yes. Yeah.
More examples, if you go through TechCrunch, whatever, we just picked these three. And I think the Databricks one, because it literally, the rumor came up today, is a very interesting one. So we're mixing this with one other observation, Shub, that we wanted to share. So
Mhm.
a friend of the family, of the
Mhm.
fundamental family,
Mhm.
shared with us a conversation that they had with one of the biggest investment banks in the world in the last few days.
Yeah.
And that bulge bracket investment bank told that family friend, hey, in 2025, our bank, our house estimates that there will be a flurry of tech IPOs in the United States.
Mhm.
What do you make of that?
I mean, I think it's. I would say it's about time. I think it feels to me, and I can't unfortunately substantiate more what I mean, although I'll provide some context perhaps. But it feels to me like the floodgates have begun opening and very soon will be fully open. And we'll see a plethora of IPOs. I mean, we are already seeing quite a few of those in India, which we'll probably get to in a bit. And I think it's a weird situation where I think a country other than the US seems to be leading the IPO market. And usually, what we've seen in at least our contemporary history, when you have that sort of a situation, the US never stays far behind for too long. It has to get back to its leadership position. So it feels inevitable that there'll be a big flurry of IPOs in the US, which, again, in a very harmonious way, will actually also create even more IPO opportunities and more optimism all over the world, I feel.
And it's interesting that it comes like literally this phone call with that big bulge bracket investment bank happened just after the new presidency in the US got
Mm-hmm.
announced. I have a secondary data point here. I spoke on Monday with a founder that is building for the US,
Mm-hmm.
US customers, longstanding, etc. And that person, that founder, told me, "Hey, one of my customers, big GC, owner of that big GC firm, said, hey, if one president gets elected, I will fire 10% of my staff
Okay.
If the other candidate gets elected, I will hire 25% more.
Oh,
Talk sentiment.
yeah. But I mean, so some people may say, hey, this is all an overreaction. It's and it might very well be, but to be fair, there's also some math that supports maybe not the extent of what you've said, but a
Hmm.
little bit. I mean, if for example you have higher tax rates or things of that sort, the tax can literally maybe wipe out a few percentage points of your either your revenue or your net income, and that maybe makes it harder to retain some of your staff if you're a low margin business.
Yeah, potentially. I'm not sure that was that sophisticated though. I
Yeah,
have
I
a
think
feeling it was more sentiment.
the scale of the numbers that you described from this example, I think that's more than math, or that's way beyond math.
Yes, that's a different level of sophistication. Yeah. But take that together, right? I mean, if you
Mhm.
take these data points, you take the data points of the rumors that currently are being published about these
Mhm.
mega rounds, then we see Zepto actually factually raising more than 1 billion this year. And again, like we're leaving out dozens of
Yeah.
examples. Shub, it sounds a little bit like we're walking into an IPO window again
Mhm.
in the US. But in India, talk to me about IPOs. I mean, is the
Yeah.
window open, closed? Has it been open for a while?
So I think so. There was an IPO window in 2021, as it was, I guess, all over the world. But there seems to be another IPO window which started sometime late 2023, and it feels like it's been open and getting quite strong and robust over the last year. In fact, interestingly, for those of you who are maybe not following the scene, we had two. I would say one was very high profile tech IPO, and another I would say also reasonably prominent tech IPO. The more prominent one is a firm
Just
called
this week.
just this week, and obviously there's more in the pipeline. Interestingly, you and I, we did some analysis of Indian IPOs as well, which was
Yes.
quite interesting, quite revealing actually, as to just how many tech and 1 billion plus IPOs have happened in India of late. But interestingly, just this week, earlier there was an IPO done by Swiggy, which is a, think of it like a food delivery service, something like a DoorDash in the US, perhaps. I mean, actually, there's two of those firms. Interestingly, now both are public, but
Mhm.
Swiggy went public earlier this week with I think a 1.4 billion dollar IPO, which values the firm at about 12, 13 billion post listing. And what I didn't realize until you just told me just before we started, it's actually the largest tech IPO of the year across the globe, Patrick.
Globally.
That's mind blowing, right? It feels like it was not too long ago. In fact, around the time we started Fundamental, where there was this narrative, I would say quite justifiably so, that India was a market where you don't see IPOs, tech IPOs. And now all of a sudden we're seeing like, it's like a,
That was your reminder in your calendar popping up to buy Swiggy shares.
no, it was a reminder in my calendar to put a few more of our portfolio companies on IPOs, to just put them to list them on the next exchange,
Good. Yeah,
right?
I like that reminder.
So it feels like suddenly we have gone from, hey, is there ever going to be an IPO, to yeah, sure, there's going to be one or two IPOs every week.
Mhm.
And I'm not even exaggerating. It actually does feel like that. For those of you who are familiar with the scene, it's a very normal conversation these days. Like, hey, there's just a continuous pipeline of IPOs that everyone seems to be preparing for
In India.
in India. Exactly.
The
Right.
other one this week was
The other one was this week was a firm called Blackbuck, another firm we are quite familiar with, know the founder well. So congrats to all of you, Yabaji. In case you're listening, congrats to you.
congrats.
So that firm went public at a valuation of close to 600 million, give or take. And I think they've gone through their tough times. So I guess kudos to them for actually making it all the way to listing as a public firm. So again, well done as a freight marketplace. Again, the interesting irony of this whole situation is I think when Blackbuck started, it was of course marketed as the convoy of India.
Mm.
The irony, I'm sure you're understanding the irony here, right? So convoy itself, for those of you who are not aware, has gone belly up. I think maybe it was last year,
Yeah.
went bankrupt, unfortunately.
Yeah.
Uh, and hey, kudos to Blackbuck for seeing it through to a public listing and hopefully a very sustainable and bright future. here on.
I like that one. So that was a roughly 570 million US dollar
Yeah.
valuation at the IPO. I like that one a little bit more than Swiggy, actually, just because it's a
Mhm.
B2B company
Yes.
and it's a logistics slash supply chain company. And that market has not, you and I, we've been debating for since we started Fundamental that
Yes.
logistics need to produce very strong tech exits.
Hmm.
This is one.
Yeah. Exactly. Yeah. And I think it's actually very promising. Also a reminder. I mean, obviously, now maybe I'm making a counterpoint to where we started with. It's also a reminder that sometimes all you need to do is just stay alive and take control of your destiny as much as possible. And once either the cycle turns in your favor or things get better on their own, that's it. Maybe you can see yourself through to the finish line.
And you're saying that, sorry, I just want to contextualize it for everyone listening. You're saying that because after 2021, the years of 2022, 2023 were very, very hard for logistics
That's
companies. The
right.
freight rates dropped oftentimes 60, 70%.
Yeah.
Volumes dropped
Hmm.
in some categories. And
Hmm.
so you had to make do with much less revenue potential. You had to fight more for market share. You had to adjust overhead structures.
Yeah.
And Blackbuck was probably influenced by that a lot, right?
Absolutely. Yeah.
Yeah. Okay, so let's put that into context. So what we've provided is observations of, a changing sentiment in huge funding rounds at multiples that, seem to be optimistic.
Yes.
We've had the big investment bank speaking of a flurry of tech IPOs behind the scenes with our family.
Yeah.
Um, Now we have India already delivering big IPOs
Yeah.
just this week, two high profile IPOs.
Hmm.
What's the outlook for Indian IPOs, Shub?
I think actually quite bright. I think there's so it now feels like if I may, I guess reveal a little bit more peek behind the curtain. It feels like often when you now talk to growth investors, bankers, even if you are a company which is past, let's say, Series B stage, and let's say your business model and performance is quote unquote good, it should be most bankers expect that you should be an IPOable candidate in the next 2 years or so. And they actually start evaluating you from the perspective of the metrics, profitability, growth, level of governance, how well you're audited, etc., to see if you're an IPOable candidate for the next 18 months, 24 months or so. And if you're not, the word also gets around that this company is probably not going to be fit for an IPO anytime soon. So it's an interesting way where it is actually the liquidity is unlocked, but it's also the liquidity is also created this unlock the doors to, I guess, more professionalism, aspiration, and some understanding of what is the next step. So previously, I think when it was IPOs weren't happening, you didn't even know what the next step is, and therefore everyone's fumbling to get to the next step, this imaginary next step. And I think now there's this clear understanding, and it seems to help everyone get along on what they need to do to get to being a public company and beyond. And I think that's created a brilliant setup, in my opinion.
Creates a lot of it creates a cluster of competence almost in
Yes,
India, right now.
yes, that's right.
I find it interesting for added reasons too. It's so back to the sentiment point. Positive sentiment tends to foster positive sentiment until trigger events happen.
Yeah.
Bad news come in, etc. So a rally can sustain itself just because it is a rally for a while. Um, and we seem to be at that point where rally has perhaps already begun in the private markets to make it to the public markets.
Hmm.
So I find that part of it interesting. The other part of it that I find interesting too is that if you IPO, the term IPO in tech is oftentimes associated with extra large numbers.
Hmm.
Does it have to be? Like, what about IPOs that are mid cap? Are they happening?
They are happening. Yes, those are happening as well. Valuations in the hundreds of millions, even sub 100 million. I mean, at least in India, that seems to be a very liquid path. In fact, in the analysis of some of the IPOs that you and I did recently that have happened in India, some of those are actually performing brilliantly, I have to say.
Yeah.
It was actually very revealing, and I found it very encouraging as to what's been going on.
And that's my issue with uh, thinking of IPO as a huge outcome.
Hmm.
That's the objective, but that's not um, the be all end all.
It
When
doesn't
you
need to be the finish line.
yes, but actually my point is exactly the opposite, Shub. My point
Hmm.
is an IPO can also be an intermediate step that you just prepone, if that's a
Yes.
word, like the opposite of postpone. So let me
Yeah.
explain.
Hmm.
One way is to see IPO as the ultimate liquidity event for shareholders in a private company.
Yeah.
But another way to frame an IPO is, especially when you think of IPOs in the end, I mean, when have you ever seen an IPO sell 100% of the company? It doesn't happen, right? So an
Correct.
IPO floats shares, and oftentimes in an initial public offering, there's maybe 20% of the shares on offering.
Yeah.
So you can reframe it and you can see an IPO in the context of midcap now also as a funding round.
Hmm.
And if you see it as a funding round, especially in markets where growth capital is constrained, in India's growth capital has been constrained for a lot of companies for a long
Yes.
time.
Yeah.
Growth capitals for asset heavy, capex heavy companies, for example, new age cement players,
Hmm.
it wasn't there.
Yeah.
And we saw mid-cap IPOs for some of them in Europe over the last 2 to 3 years
Okay.
as well, where money was raised 10, 50 million at a valuation 2, 300, 400 million
Hmm.
pre. And yes, now I'm publicly listed. That comes with a little bit more scrutiny. But on the other hand, I just got my growth round done.
Yeah.
And all of a sudden, my shares are actually liquid,
Hmm.
which has upsides, downsides. The downside is my fair value in the books is also more volatile if I care
Yes.
about that, which I personally do not.
Hmm.
Um, the upside is I can get out of this illiquid venture asset class more or less whenever I want. It's not exactly true because you still need a buyer, but if it's sort of a liquid market where I list it, I
Yeah.
have a liquid asset now, which is a
Hmm.
big benefit. So a lot of I think what we're going to see actually, maybe less so in the US, but more so in India and more so maybe in capex heavy models across the globe is 200 to 500 million IPOs
Hmm.
instead of Series B, C, or D rounds, and then treating those as the growth round.
Yes. Absolutely, and I think the confidence or uh, the lineup of larger IPOs that we have seen has I think vetted the appetite for IPOs and participating in new age stories in general, which is why I think there's even more interest in participating in earlier stage or smaller market cap companies to sort of ride the growth a little bit earlier.
Now, imagine that were true, and it will. What I just described is not going to be an at scale solution, but imagine for a moment it would be
Hmm.
just fun thought experiment. What would that do to growth funds?
Oh. Um, Interesting. Isn't that interesting? Um, I think in that case, growth funds. I mean, of course, I don't know the extent to which the regulation changes. Many of the growth funds would probably start also participate have to be forced to participate in public markets, just as hedge funds would, for instance. And many of these funds, by the way, do this just do both, just under different strategies. What they also might do is be forced to invest in companies that, for their own specific reasons, choose to stay private.
Okay, yeah,
Obviously, a lot of those companies are very high quality and very important, certainly for the narrative reasons and also for what they're doing. Um, Now, it depends on how long you can stay private with those narratives, and does it put a lot of pressure on subsequent on those investors if and when they want to make their assets, make their positions liquid. On do they need to then eventually go IPO? Do they need to find an even bigger growth investor to exit? How does that play out? And I think
yeah,
those are questions that are hard to answer.
it's interesting. So yeah, um, I always say, hey, the job of the investor is not to make predictions. It's just to observe what's happening right now.
Yeah.
If I'm observing what's happening literally right now, this week, past 10 days, rumors in the market that
Mm-hmm.
make it to the public surface, I'm observing a very different sentiment
Mm-hmm.
just over the course of 2 weeks.
Yeah.
And I'm observing other people making the prediction that next year will be a top year for IPOs.
Yeah. Yeah. And I think at least I mean some part of the year I think will definitely feel very bullish, very optimistic. I think as you've said often in this podcast before, important to remember that those good times may not last forever, or not for you to become dependent on the good times lasting. I think that's the
Indeed.
more appropriate thing to say.
Indeed. That actually reminds me of one other thing. Um, so my dad used to say, "Hey Patrick, the money is not gone; it's just with
Mhm.
someone else now," um,
Nice.
which for the most part is true. It's not true for notional value in derivative markets because that money never existed in the first place. But for the most part, it's true. And so this money, the reason why I say it in this context is a lot of this money was never gone, Shub. It
Yeah.
just was parked, and
Yes.
it was and is looking for assets. And maybe the
Yeah.
money is now becoming impatient to find assets again.
Yeah. Are you referring to parked in like treasury bonds, etc.?
Exactly.
Yeah.
Exactly.
Yeah. Yeah, I think that is very much the case.
So, maybe from an economic, business, and trade sentiment perspective, we're looking at a good year.
Feels that way.
Yeah.
Yeah.
We certainly have our own hopes for portfolio IPOs, Shub.
Yes.
Most high profile one.
Look, I don't want to, what's the spoilers? I mean, it's a very high profile firm. We have discussed many times, infra market, and there's a few others as well, which are another one perhaps closer to the finish line, but maybe a couple more as well on a slightly longer timeline, also working towards things. So I think it's looking like a very promising IPO pipeline for us as well at Founding Money.
2025.
Yeah.
Good. So this was our 51st episode. You and I have a bet. I said 50 by the end of the year, 60. You said 60 by the end of the year.
Yes.
So we can do 3 more episodes, Shub.
Yes. It's isn't it nice, Patrick, when you take a bet where you have complete power to make sure you win?
Yes. It reminds me of the one bet I have with a colleague where I said, hey, this company will go bust. And the colleague said, no, it will not go bust. And we didn't attach a timeline to it. I feel good about my bet.
Nice, nice.
Always read the fine print.
Yes.
Cool. All right, sir. Thanks for your time and happy weekend.
Happy weekend, sir.